This episode is sponsored by Appian, a technology leader in driving digital-first insurance transformation. With Appian's low-code automation platform, you can build enterprise apps and workflows rapidly in an agile environment.
This is our second bedroom in our apartment in New York, which has become my office. And my wife has been very generous and allowed me to decorate it with a couple things. So I have my subway maps here. It's not plugged in right now because I didn't want to risk but this is an LED board of the New York City subway system, and it lights up in real time. So when we had the big flooding, actually right around when we were having coffee, this was all shut down because all the subways were shut down. So you can turn it on. I like to keep it next to me so I can see what's going on with the subway. So yeah, and then I have a couple of actually vintage subway posters in the hallway out here too. Big subway fan. I track all my subway rides on my phone, so I can put them into an Excel spreadsheet and look at like how often I've ridden on a certain car, what routes I'm taking a lot. Just it's totally like a hobby or obsession. I don't know if hobby is even the right word, but I'm a big fan. Big fan of it. I'll leave it at that.
I prefer to use public transportation, subway if possible, over Uber or Lyft, because it gives you a better sense, especially if it's the first time that I visit the place. It gives you a better feeling of how the country operates, because that's, how you deal, how do you actually pay for the ticket?
Yes.
How do you orient? There is a little bit, the first time that you go on a subway, and for me it was, in Israel we don't have a subway. Now they are building one in Tel Aviv. But first time that I traveled, I think it was to London and later in France, in Paris, the metro there, you have that, I can navigate and I'm going from here to there, which routes, where do we need to switch? It was such an adventure.
I know.
To figure that out.
And you're with people who live in that city. Like, you're on the subway you're not in the four walls of a car. You're really experiencing that city with the commuters, with the travelers, with the people who live there. So I'm a huge fan of it.
But before we dive into the insurance part of the conversation, it was great to see you in New York. I think it was just a few days ago before Ida hit. No, it was the day that Ida hit, and I made my run. Well, it was a pre-planned run finally back to Los Angeles. That was a lot of fun. And as you can see, the sun is shining here. But let's talk a little bit about you, if you don't mind.
Yeah.
For the people who don't know you, do you mind giving us a little bit of introduction? Who you are, what do you build? And then we can talk again about trains and the fact that you are like a hardcore New Yorker.
That's, I'm sure your guests will love to queue up their insurance podcast and hear all about the New York subway system. Well, this is a delight to be here, and both to see you. Glad to see you back in LA. Glad that your travel worked. That was a little dicey, but I'm glad you made it all worked. And I'm Stuart Winchester. I'm the founder of MarblePay.com. Before that, I worked at Better.com, where I was the general manager of their insurance vertical. I actually founded their insurance vertical. If you look at Better's, materials, you'll see that it's mortgage is their biggest, and then insurance now is their second biggest. And that was sort of my baby while I was there. And then before that, I worked at a coding school called General Assembly, where I ran the whole campus for their flagship New York campus. And to bring back to Marble, sort of like in this insurance journey that I've been on, coding school, mortgage, insurance, now launching an InsurTech, we sort of saw this theme of there was no true digital hub or digital wallet account or central, almost fintech-like platform for insurance. So that was the opportunity that we saw with Marble, and that's what we've gone ahead and built. So Marble is this digital account, universal account for your insurance, sort of like you would have your Mint for your budget or Robinhood for your stocks. And we've been at it for just over a year now. The application's been live for a few months, and I'll leave it there. But yeah, and I'm a lifelong New Yorker, and I'm here right now.
So basically, what you've noticed or realized that is broken in the industry, or not broken, but is still missing, is that one digital go-to.
Exactly.
Now, there are a few, there are a few other solutions similar to that. But what is the main thing that will bring customers to you, or what is the incentive that they will go? Are you a customer first approach, or you working with the brokers, the insurance companies? Where are you in that incentive kind of motivational part?
And I mean, I do like that, like your note there. There was nothing. Insurance and like legacy insurance companies can get a bad rap. I think it's often very popular to sort of beat up on them, especially if you're a founder of a startup. But really, I look at less of what's broken and just what they haven't had time to get to yet, or they've focused on other areas. And I think what you've seen is a lot of focus on distribution, the tools and technologies of distribution, and the tools and technologies of what I would call like risk assessment, especially with climate change. There's been a lot of needed investment in these areas. And that has sort of, for better or worse, or again, not a flaw, but has left some of these consumer tools to last. And that's what we're trying to build with Marble. So with Marble, what we have is a couple different pieces, but what makes us truly unique is that we've layered a rewards program into our technology. We did about like a year's worth of research with McDermott, Will, and Emery, and Cooley as well, actually, to figure out the best application of rewards that does not violate what we all, any insurance listener is going to immediately fire, rebate law. There are very particular ways you can approach it, not soliciting new business, not soliciting cross-sells, keeping the incentives to risk-based or financial wellness that stay within the acceptable contours of non-solicitation with a rebate. And what's been super exciting for us is since we've started Marble, the NAIC has sort of also proposed model law that is really explicitly consistent with our approach to this as well, which would even strengthen our position. So taking the jargon aside for that, what does that really mean? You log in, you tell us a little bit about your assets, you tell us about your insurance information. We'll put your insurance information right into a wallet. You can refer friends. And in the coming quarters, you'll be able to do like telematics things or risk mitigation things. And we will pull some of the incentives that the companies have for those things, discounts, lead fees, things like that, and fund a pool of rewards that we push to our consumers. Really, the most straightforward way to think about it is the way that credit card companies will skim a percentage of interchange and push that back to a rewards program. We're doing that for the first time for insurance customers.
So basically, you're using the credit card model and applying that in the insurance for other type of rewards.
Exactly.
Your customers or the free customer are policyholders.
Yes.
But the paying customers are the insurance companies. And in a nutshell, you need to sell this offer for both parties.
Yes.
So it's not a marketplace, but it's almost a marketplace.
Very similar to a marketplace.
So that brings us in. Yeah. So I imagine that your champions are the CMOs or the marketing part of the insurance company.
Yes, that you're 100% right. We marketing leaders tend to find us the most interesting. I would say the other two parts of of organizations, 2.5. Marketing is the big one. Retention, people who are retention leaders, chief retention officers, CRM, chief retention managers, or whoever, they find it very exciting. Obviously, rewards for everyone pings, hey, I can help retain customers. That's what rewards and credit cards and airline miles do too. And then finally, sometimes innovation teams come to us too. They tend to have a little bit of a harder time handing us off internally, but we do talk to a lot of internal innovation teams. The final piece that I would say is like the half, which is very interesting, is that we started to talk to a couple of large carriers who want to find ways to incentivize agents, which we're exploring now. Yeah. So actually using the technology to create games and incentives and leaderboards for both independent and captive agents.
Yeah, listen, every time that I hear gamification within the insurance industry, I need to ask what, why, and why again?
Why again? Yeah.
Yes. Now, I know that we all have to play games. It's great. The gratification of doing something is important. The gamification and a leaderboard is super important. But is there something more than a leaderboard that you can provide them? You're not going to give agent stars or points or anything like that.
For us, what has been sort of the distinction when we talk to carriers and agencies about this is the second piece of what we do, which is the sort of listening and validating that actions have been done. So it allows us to create sort of a validation loop of confirming that your agent has done a continuing education course, listening to your agency management system and confirming bound policies and dynamically creating rewards up to that level in response to that. So what we're not quite as interested in, though it is fun to play games, we're not quite as interested in like the, addiction of like the game. We're more interested in actually validating and confirming that the actions that we want to incentivize have been done. That's been a big investment.
So there is no like confetti falling down every time.
No, I mean, we can certainly build it if they want it. Yeah, but no, for us, it's much more being like absolutely certain in real time when these things have been done. So you get real-time feedback and real-time rewards. Now, this whole agent thing is really sort of out there for us. It's just been a request. We haven't built it yet. For us today, we're much more focused on like doing that for the customer. So confirming you've installed your flood monitor, confirming you've done your home inventory, confirming that you've printed out ID cards for you and the family, confirming you've switched to paperless or paying via ACH, and then offering you rewards for those.
I think that I click that, yes, I would like to make it paperless so many times, and I still get paper.
It drives me.
And then it's like, why? It's like you're trying to incentivize me to be paperless, but then it doesn't work in the back end for you. It's like, where is it wrong?
I have called. But I've called call centers about this.
No kidding. That's impressive, man.
Well, I don't want the mail. I just don't want the mail.
Yeah. It's like, I don't need that junk. I have so much mail junk already. It's like,
exactly.
Why do I need that as well?
So what gets the carriers excited to work with us is being able to tie ROI basically and validate that ROI. So like
ROI on what?
On the amount of rewards that we're putting through the system and saying very confidently, our APIs can listen for these changes, bill pay changes, telematics, anything that has a potential risk or expense ratio improvement, and then we will subsequently push out rewards that we decide the amount on, and nonetheless, with that budget set, you as a carrier can say we'll actually have a more profitable book of business when we issue the rewards because we can confirm these things have been done. And so our first carrier is launching very soon, and they're targeting a 9-to-1 ROI, return on investment for rewards, in terms of making their book more profitable.
Can you talk a little bit more about your work with CSAA?
Yeah, so we're launching with them in the coming months. And I'll sort of leave some of the details out because we'll have some more information coming out as we actually put it into the wild. But what I'll say is this: they've been incredibly forward thinking about this. Their CMO has a strong conviction, and I share it with her. And we are going to build something and launch something with them that is going to really. So here's what I can be sure it's going to do. It's going to be exciting for their customers to have a really premium rewards program that they can access. It's going to be great for their expense ratios and their and risk mitigation, because these things are going to get incentivized and iterated on in real time. And ultimately, we think it's going to be like the sort of a huge differentiator for this really fantastic legacy brand going forward, and something that they can really lean on as a way to stand out among the incumbents, the top 15 incumbents that they're a part of.
Let's talk a little bit about the consumer or the user, because first of all, I assume that you're a mobile first or a web first. Or
so yeah, this is a good. So we're web first, but we're hard at work on the most requested feature from our users, which is an app. And so that's what users want the most. We launched in April of this year. And
congratulations!
Yeah, it's like an amazing feeling to put a digital product out there and see people start to use it. It is, I will say, I don't know if I'm supposed to have more bravado as a founder. I will say it is terrifying. It's very cool, but it's sort of like throwing a party and seeing who's going to arrive. And
I'm familiar with that.
Yes.
Yeah. But it's a bigger party, costs a lot of money, many people work on it, and you're just waiting that it will happen.
Exactly.
And who is going to use it?
It's like exactly. It's like a very expensive party, and like you don't, like, no one RSVPs. Like, it's like you don't really know if anyone's going to come. Besides your mom will sign up. So that's the thing. So now we have about 4,000 users in 4 months. That we're pretty happy with that. Got millions and millions of dollars of premium in this digital wallet. We pushed like $45,000 worth of rewards out to our users, which is cool. People are shopping, people are referring friends. But what's been exciting to us, I think, mostly, is we're starting to have conversations with users about insurance that sound like they're talking about a fintech, which is what our goal has been. So we have this ambassador program. Like any member of Marble we do quarterly invites, and members can raise their hand and say, we want to give direct feedback to Stuart. They join like a private group and they can give us feedback. And people are really starting to talk to us and about us. Yeah, like we're a fintech platform, like we're a Chime, like we're a Robinhood. And that's really what we want to build. Those are the features that we want to build. So
that's a great place to have your brand in. Yeah.
Yeah, it's been fun. I mean, but again, it's, to continue the party analogy, it's maybe only, in the lifetime of Marble, it's still only the first 15 minutes of the party. So like a couple of friends have arrived, maybe they brought friends, but like now we need to find out, are we going to like pack the house? Is it going to be, are we going to have a line outside? And so it's still early.
Still is.
Yeah.
So how users learn about the website and your product?
This is a very unpopular thing to say if you are talking to like venture capitalists, but we have a lot of success with Facebook. Okay. It's very cheap for us. It's very efficient. We find a lot of really interested users. And then we also have some good partnerships with other fintech applications, and we have affiliate partnerships with them. But honestly, Facebook for us has been, my background is in marketing and acquisition, and my sort of simplistic approach is like, as long as it's working, as long as you can forecast your acquisition, and as long as the acquisition keeps getting better, I don't have a lot of ego, right? So if Facebook is boring and works, let's just keep putting money in Facebook. It doesn't. I wish I had a cooler like story to tell, but it's like, hey, if it works, it works.
I think that the story, we don't really need to have like every time something flashy. The fact that something works and delivers, it's more important.
Exactly.
Which sort of brings the question, it's like, why do you think VCs don't like it?
I think that, I can almost say I know why they don't like it, and I understand this to some extent, but it's very unfashionable now to
Facebook marketing or a non-defensible method?
I think it's just hard as a VC to be like, I'm putting my investment into acquisition. Like if I write a $500,000 check, is 400,000 that just going to go into a Facebook budget? And that's why you've seen this rise of B2B companies being, B2B and SaaS companies being much more fundable, because I think venture capitalists can say, well, we're building enterprise value. My investment's going to go towards building the technology. It's going to go to building, like you just said, like a really defensible moat. If we can get into this technology, can get into the top 10, Fortune 100 companies, we have a moat. And I mean, I think that I agree with that. Unfortunately, consumers still need new stuff. Consumers still want new things. There's still huge opportunity to build really cool consumer products, and you got to market to them. So, I mean, I think for us on the fundraising journey, we've had to work really hard to only talk to venture capitalists who like and who understand how to invest in consumer businesses. Because it's not a judgment. It's just sort of, that's their expertise, and they kind of get that that's how it plays.
So basically, it's sort of catered to the usual, I would say, analogy of, oh, you've been talking to only East Coast VCs. Well, yeah. Okay.
Yes, no, but I mean, that, like, it's funny. People said that to me before I started fundraising, but like the coastal breakdown is somewhat a true stereotype.
It does. I would say that that stereotype is built based on experience. And yeah.
I mean, I guess in your like InsurTech community work, because you obviously, the community you built is in LA, but you're involved with ITC in Vegas, which I don't know, that brings everyone together. Have you seen, I guess one thing is, like, have you seen that same reflection in East Coast, Midwest, West Coast insurance mindsets or insurance innovation teams? And then, I mean, do you see the same thing sort of in your work building communities?
So I think that it's, in terms of a community, COVID a little bit disrupted us.
Yeah.
Right. So while we have here a community, the startups themselves, the founders, they are talking to everyone that they can find. Right. So for me, the InsurTech, it's not for profit. It's almost a hobby that started as a hobby. So there is no a business behind it. That's in terms of the community. So it's just bringing the people together, and from there are all kinds of different opportunities. That was the idea in the Let Go. I was still with Farmers Insurance. I never planned to turn that into a business. Now, these conversations, of course, led towards, as I said, different opportunities.
Yeah.
And my audience is global, right? You're in New York.
Yeah.
There are people from Latam, Europe, Israel. The conversations that I have today, it's global. We talk about insurance, we think about the US. However, the technology and the startups and the insurance industry itself, it's global. You'll have the risk here. At the end of the day, you're going to sell it to London, if it's Lloyd's or the syndicates or a certain German reinsurer. You need to work with everyone. And it's funny, but we think about it as, it's this $5 to $6 trillion in premium industry. But at the end of the day, the people in the industry, the decision maker, it's a very small group in a few thousands.
Yes.
So I'm sort of lucky to be in a position that I can have a lot of conversation. Like, last week we met in New York for coffee. Today, here we are. I'm in Los Angeles. You're there. It's 10 a.m. and we're having this conversation again, right? Which tomorrow or on Tuesday, part of this conversation, the rest of the world will see.
Yeah. It is a really, that was so I'm sort of new to insurance in my career. Over, I got licensed 4 years ago, built this agency, but InsurTech Connect was like a really eye-opening thing for me, I think, because it did two things. One is that it showed me how much larger this community is than just the New York companies that I knew. But also, and this was sort of a very funny thing, it simultaneously showed me how kind of small some of the networks within insurance are, because you'd walk the floor at ITC, immediately start picking up faces, seeing names of people I'd just been on the phone with, people I'd just been Zooming with 2 weeks prior. It's like, it's It's a very interesting insurance community. It's funny. I just think insurance in general, as a industry, can often fly slightly under the radar compared to the high flying bankers or fintechs or stock trading. But it has this very powerful and very profitable, network and ecosystem.
It sure does.
Yeah.
And when we're talking about ITC, I don't think that even started to scratch the surface. ITC, after all, it's InsurTech Connect. It's everything which is around the technology of insurance. And we always like to break it. We have the reinsurer, we have the carriers, MGAs, brokers. Then there is everyone that is in between, right? All the ecosystem, all the service providers. And that's huge.
Yeah.
We have the tendency to disregard the service providers.
Yes.
And by service providers, it's the consulting, it's the legacy, it's the core systems, all the technology providers. And then, of course, there are other different layers within that ecosystem. And when we are dealing and we're talking about, originally you asked about VCs. And one of the things that in the conversation, especially with startup, I'm talking about, when you think about your exit strategy, don't just think about the insurance company or fintech because there are so many overlaps. Think about who can acquire you within the ecosystem.
Yeah.
We just learned about an exit by Ask Kodiak.
Yeah.
Or I keep confusing one of the geniuses, right?
Yeah.
By a Bold Penguin. All of that, it's fantastic. There are so many different opportunities if you have the right value proposition and the right technology. Cover Wallet and Aeon. Yeah, that completely makes sense. Willis Tower Watson and Aeon. No, that didn't really work through, and that's not really an exit. But
no, I mean,
you get my drift.
The technology, I think the posture that you have towards the consumer and the sorts of consumers that use your technology, if you are a consumer brand, these are all like really viable narratives for an eventual exit within insurance. And then exactly to your point, and I would take your point about the ecosystem of providers even further, as other financial platforms start to get like what I would say like insurance curious, you start to see these other exits open up, right? I mean, you have PayPal talking about their super app. You have Walmart and Ribbit Capital building a super app. There's no super without insurance. It's like the third largest household financial instrument. So these are all, and the insurance ecosystem, you need all the pieces if you're going to do it right. So all, raters, AMS, agency communication, anything that touches it is eventually going to be viable, I think, fodder for the large financial platforms too.
And then we see different conversations about, and let's tie it back to the investors. It used to be that you need to talk about the TAM of billions or tens of billions. So when we are, in insurance, we hear car insurance like, that's in the US, it's only $220 billion in premium a year.
Yeah.
Right? That's something that I can go after. It has a certain cost to it. And you don't really want to open yet another MGA or insurer, right? There are successful ones and there are those that I root for, but I will not talk about it at this point. I was talking to a startup that he's in a niche of 5 billion.
Okay.
Very small niche. 5 billion. If you go talk about it, it's like, hey, I have this social app. It has a 5 billion. You may get a little bit of love somewhere.
Yes.
But in insurance, what the hell is 5 billion in premium? That's a small niche. But the whole idea of that startup and the pitch that the founder gave me, it's like, but it has a potential to increase it, to be 50 billion. Right? Because at this point, it's not just about us getting 1% of the pie. It's us getting 1% of the pie in the first year or two, and then increasing the pie
exactly
by 10x and 50x, right? Because now the industry, or actually not the industry, the people are undercovered. There is not enough coverage. There is so much opportunity there. And then it's a question, can you do the right marketing? Can you create the right incentives for people, the education and all the things? Education is important, but today people don't ever say, oh, get educated or go educate yourself, because that doesn't work, especially if you're dealing with all the politics on social media and other things. It's more about, let's create the right content that they can consume it and set some sort of an incentive out there. So they will go and buy insurance that will, I like to call insurance an economic stabilizer.
Yeah.
That will... Mm-hmm.
No, I mean, insurance is this is obviously sounds self-interested because we both work in insurance, but insurance is a very interesting financial tool, both in terms of its current use, like day to day in the world, and even in America with hurricanes, Ida,
oh yes,
very interesting conversation. And then when you look at it as a historical instrument too, right? I mean, Lloyd's predating, these are there's an instrument that in many ways is unchanged, much longer than even other financial instruments, stocks and equities and things like that. The core insurance contract is largely unchanged. It's collected risk, some exceptions from that risk, and then an agreed upon price to protect that risk.
Yep. And then from time to time, you see a little bit of new models, but there is nothing new there, right?
Yes.
So there is a very fresh attitude by Just Insurance, Just Auto Insurance, that sit here in Santa Monica. They have a different approach. You have all the different micro insurance.
Yeah.
We learn more about, the usage-based insurance, and how I drive insurance. There are all kinds of different approaches, but they are still sort of covering the same thing, because it's hard to create something that will be new, from peer-to-peer to mutuals, to all the other different permutations and combinations that we can have. It will be interesting to see if something different will be there, right? It can be, we minted an NFT, and then you hear a long series of how blockchain works and all that stuff, but then you go like, okay, so what's the point? How does it really change the life of the policyholder?
This has been
how are we going to help, right? There are so many cool technologies, and I think that on LinkedIn there was someone asking me about the lessons that I learned, and one of the lessons that I wrote there is like, technology is super cool. There are really amazing technologies out there that, from AI to actually using AR in different fields, but I need a use case. I need an economic or real business use case that all these startups will actually provide, and will, push the needle a little bit forward. If it's from, a return on investment to their investors, or making the world a better place. I don't know. You pick the needle that, you can push forward. Yeah. So you've been in the insurance space, Marble and Better. How did you get, even with Better, how did you get into the insurance there? Because you mentioned that you are a licensed agent.
Yeah. So, no, it's funny. I was recruited into Better to run what's called revenue operations, which is really just consumer acquisition, and also someone who can, be in Excel and, help with the fundraise. So I was sort of like pretty involved in Better's Series C fundraise, and that was successful, as you can tell now. Better was on its way to a SPAC, but one of the big pieces of feedback from the market at that time was, look, we want to see more LTV. These loans are good, but mortgages are expensive to acquire. How can you expand your LTV? And from there, sort of in the revenue seat I had, I built the operating model for that for the business up to that point. I went kind of down the stack and sort of looked at what are the adjacencies to a mortgage: title insurance, homeowners insurance, real estate agents, home warranty, home security. There's a couple of things. And for me, looking between title and homeowners, because we did both, homeowners was more interesting. Hippo was raising money at that time. Lemonade was around the corner from us down in Soho. There were some natural things that made me excited to kind of like work with the companies in those spaces. And then we sort of very quickly decided that we wanted to go the agency route. We didn't want to do lead fees. So, and that was sort of an economic decision, but it was also primarily a customer ownership decision. Like, we wanted to have our agents on the phone who could go and talk to your mortgage broker or your mortgage underwriter and really make that a consistent brand and customer service experience. So that meant we needed agents. So, at the time, New York was still requiring in-person schooling for licensed agents. So I spent 3 weeks in a classroom next to Penn Station, took my test, which was the last time I've ever, and hopefully will ever, pull an all-nighter. Kind of like swag. I sort of was like, oh, this test will be no problem. And I took a practice test the night before my actual test. They let you take one practice test the state provides. Bombed it at like 8 p.m. I was like, I cannot show up to work and not have passed this test on the first try. Like, Vishal sent me out to go do this thing. I got to come back with a license. So did what needed to get done. And I went to the standard, went to the testing facility, passed my test. And from there, went to work, just like really getting, immediately went up to the NAIC conference in Boston, started to meet with actually regulators at that point, but it was just the nearest conference. Then went to InsurTech Connect, got to know the Hippo team, got to know the Lemonade team, got to know the guys at Young Alfred. And, the rest, as they say, is a little bit history. I mean, met the IA Capital team. The one funny thing I'll add for the, benefit of the podcast is my dad is like a lifelong insurance professional. He didn't go to college. He went to work at Lloyd's when he's from England. He went to work at Lloyd's when he was 18. And to this day, he still works in insurance. He works for Sampo, or he's on the, he's does a couple different things. But so this has been one of the great joys of his life, I think, is watching his son, who was, an English major in college and then went to work at a coding boot camp. The long arc of history has brought his oldest son right back into the insurance community, which he knows very well. So he's greatly enjoyed watching me end up right back where I started, which is working in insurance.
Let me ask you the final question of this episode, because we are already reaching the end of the episode.
Wow.
And I'll ask you the same question that I'm asking everyone. And can you give us a recommendation that you pick, something, a hobby, a book, TV, something that you picked up since the beginning of COVID?
I have invested a lot of time and some money over this COVID time, finally trying to push through and develop like a personal website. And it's been a big project of mine. So in another lifetime, I used to be a career coach. So when I worked at this boot camp, my job was to coach students who were leaving the boot camp to help them get a job, kind of like a reverse recruiter. Like, my job was to help them become a better candidate. And you'd always tell them, have a personal website for your writings, your code, your projects. So, anyone can go and find it. And I have had nothing. I've had like a LinkedIn, and I was like, I've got this time in the evenings watching TV, mindless TV. I have stuff that's interesting to me, transit stuff, insurance stuff, whatever stuff. So I put some work in, both myself and then with a small dev firm, to like put together a website. And I'm over the next few months, we'll start to push out more and more of just like my own, like kind of like basically just writing. Like I mentioned jokingly, like I'm a sort of failed English major who, wanted to go be a writer, ended up running an insurance startup. So I'm going to get my kicks by starting to publish some of these like commentary pieces on on insurance and whatever else comes to mind. That's probably the
Can we call it a blog?
You can call it a blog.
Okay.
That's what it is.
Sure.
So that's probably been the main one. And then, yes, as you mentioned when we were chatting before the call, I got a cat. So anyone who's looking for a recommendation on a pet, the cat was a nice COVID habit too. And I got married during COVID. So a lot of stuff has happened.
Congratulations again.
Yeah. So so if you're not into starting a blog, I recommend getting a cat or getting married.
Stuart, thank you very, very much for joining me today. It's been a pleasure, man.
Thank you so much. This has been a blast.